This was our first bubble right here. This was the tech bubble. Okay? So, but let's take a look at these bubbles, the size of them. There was no QE in the tech bubble. None. Okay? All right? And the tech bubble was created because the banks, again, gave money to hedge funds to go buy tech. There are very few Main Street people in the tech stock market. They didn't get hurt. Main Street really didn't get hurt, believe it or not. And then, of course, when the fiber optic, they said the same thing. They fed money to the hedge funds at 0% so they could buy all these tech stocks, push up the market, and they said there was no inflation. Then when inflation hit quick, everybody stopped buying, and then people got laid off, and then the prices started to devaluate, started to go down, and then this was happened. Okay. Now they said, let's create some fake wealth. And this is when they started with the housing market. And that's when Bush came in and did a con job. He said, I'll make people feel they're wealthier than they are by taking and dropping their credit requirements to get a house, a loan, and we'll drop them down. Anybody can get a loan, and we'll drop the interest rates down. We'll create such demand that people will refinance their homes. They did, $280 billion, and they took that money and they went and spent, and that's why we got this. Until what happened? Inflation again. When they hide and lie about inflation, just like over here, when it rears its ugly head, it's fast and it's swift because there's a panic. Instead of being honest with people, then you wouldn't get this. But they're never honest with us. So same thing. So oil went up to $150, and then first thing that happened, everybody stopped buying houses. People got laid off. Prices started to go down. So there's your tech, bubble 1, bubble 2. Now watch this. Now they decided, bubble 3, Obama says, I'm going to do the same thing as Bush. Instead of letting the recession occur, see, we would be in great shape if back here, okay, if Bush did a recession and everybody got rid of their debt and everybody tightened their belts up, not just people, but the governments, federal, state, clean up their balance sheet, we would have came out with about a GDP of about 5%, which would create about 400,000 jobs, okay? And he didn't do that. So instead, he decided to create a fake wealth effect of housing rather than let us go into a recession, then come out very strong, creating over 400,000 jobs. Instead, he says, screw that. I'll lie to people. I'll create a fake wealth effect, and I'll get them spending, and I'll let them go out and borrow money, and that's what happened. Now, of course, it doesn't last. Now, Obama comes in. He says, I'm going to do the same thing. I'm not going to let us go into recession. Severe mistake. So he said he's going to do it with stocks instead of real estate, but he screwed up. He soon realized that the people that were in the 51 million people that were in 401k, 72% of them got out, or they weren't contributing anymore. They all went into bonds or went into cash, or they had no money. So that's when he decided, what am I going to do? I'm going to do quantitative easing. What I'll do is I'll make sure I keep, one, savings account rates low so people won't put their money in savings. I'll keep the bank's money at 0% so that we keep, all the car loans, all that crap low. But I'm going to do this. I'm going to go and buy the 10-year treasuries and keep them low so that nobody will buy treasuries. They'll buy bonds, and this is what happened. But look at this. We should have broke already. But look at this. We keep going and going and going and going and going and going. We could do another 5 years of this. Okay, you see what I'm saying? Because as long as you got quantitative easing, the market's going up. But something's happened recently. We stopped going up. All right? We started to go this way, which hopefully ends up like this. And that'll be our third break, our third bubble. But we're going sideways because this is when he stopped. Bernanke said, no, the economy is really good. So I'm going to cut back $10 billion every FOMC meeting down to zero. Because the economy, the underlying economy is good. Because look at auto sales. Look at housing sales. Well, you know about auto sales. They're not good. They're terrible. And it's just that the auto manufacturers have a great incentive to increase production. Because remember, Obama promised us 25,000 manufacturing jobs a month. We're only at 8,000 manufacturing jobs a month. So he decided to go to auto manufacturing and get union people, hire union people, because those people vote for him. So that's why he said, then let's get into produce millions of cars. And what we'll do is take those cars, and when we ship them to the dealers, we'll call that a profit. That's when they have sold it, when they ship it to the dealer, not when the dealer sells it. So now we got 108 billion in cars sitting in these car lots that GM recorded as profits. But the problem with the dealers now, they got to go out and shove these things out the door. So they've been discounting them, and then they went back to the same banks that did subprime mortgages. Now they're doing subprime car loans. So that will eventually do this, like the housing market. So the subprime housing went into this. We just got to get inflation to hit, like inflation hit here. So now what we got is we got this fake market, all QE, and it stopped. So we're either going to go down like this. If she drags us back to zero quantitative easing, 85 to 0, we're going to drop. Because it doesn't matter that she keeps interest rates at the banks at 0. Doesn't matter if she's keeping savings rates almost at nothing. It doesn't matter that savings are, as they say, you get nothing on your savings and you get in the banks are at 0. It doesn't mean a darn thing. And it doesn't mean anything that the bond markets are low. See, they always believe, and the market will tell you, when the bond markets are below 3%, the yields, and the money to banks at 0, and savings are at nothing, then that's a good time to buy stocks because nobody will buy bonds, and nobody's going to invest in, with the bank's money at 0%, they're not going to invest in anything, and they're not going to invest in savings. So that's why the stock market should go up. Well, that's not happening. It's only because of QE. If she continues, then we're going to go this way. We're not going to go down. And look how far we are already. I mean, if we take this and draw a line, we should have been broken way back here. We should have been back just like here and here. But see, these didn't have QE. See what QE, the difference it does? So now you got to remember, it's the inflation on this side that broke it. It's the inflation that breaks it. They're doing everything. The way they're counting inflation, they changed the metric system. They changed how they're coming up with the inflation number. So they're saying there's no inflation, but at some point we're going to get this inflation. So right now, here's where we are. The key point is right here, right there. That's the key. Is she going to continue now that Grande came out today and said they're going to continue with QE and they're going to print money at 0%, so they shift everybody out of bonds into their stock markets? Japan's saying we're going to keep printing money to shift people, and we're going to buy bonds to shift them into the stock market. Is she going to be saying, no, I'm not going to do that? Then she does. We're going down. If she says we're doing the same thing, then we're going to keep going up until what? See this guy here? Until this climbs. But they've been doing a good job lying about inflation. But at some point, they're not bigger than the market. Inflation rears its ugly head. And it's unfortunate they lie, because if they're truthful with the inflation, then the price adjustments could be slow. But what happens is when you have the market going up and up and up, and then all of a sudden this inflation hits, and people stop buying, you get these dramatic panic sell-offs. But if you told people the prices were going to be increasing over time because there's inflation, this wouldn't happen. But because they hide it. So let's take a car. and say a car's $8,000, just use for sake of argument. If they kept telling we got inflation, that car's going to be $9,000, you got to adjust your salaries, next year it's going to be $10,000, next year it's going to be $11,000, people would accept it. But when they could say, okay, the price is going to go from $8,000 to $15,000, they panic. And that's what's going to happen here, because they always lie over inflation. So here's our deal. This is it right here, gang. When you say, what is the market going to do, here's all you got to know. Right there. It's going to go down if they go from 85 billion to zero, regardless if interest rates on savings are low, interest rates are low on bonds, and their idea is people won't put, if they are, people won't put their money in bonds or in savings, and as long as interest rates are zero at the banks, that means people will still go out and they'll buy stuff and they can get it on terms and the interest is low. So that's the excuse. See, remember, these are always the three things that Wall Street will try to convince you to stay in your stocks. Remember yesterday I said this here. Can you put my yesterday chart, Stinger? Okay. Okay. Yesterday when they said yesterday when they kept saying this, remember? They kept saying how the economy is really everything is doing good. Where the hell is it?
We need to have a relationship.
I'm sorry.
It's really not a housing economy. This is an economy that's driven by good economic policies, by good monetary policy.
Okay, that was 2008, and he's saying this. He's saying this was good. He said everything in he said back in 2008, before the market crashed, right here. He said everything was good. The economic policies that drove this rally was good. Give people homes that can't make the payments on them, that their credit is lousy. And give them money at 0%, let them pick their payments. Hear what he said about that? Those policies were great, really. Same thing here. They're going to do the same. They're going to keep lying to us like they told us that the manufacturing ISM number was good. It wasn't. They're telling us the trade deficit from 42 billion up to 47 billion. It was good. It was strong. We're buying a lot of stuff from overseas. All a lie. It means it's weak. So as long as they can keep telling us the story, and as long as she keeps on doing quantitative easing, we're going to go higher until what? This guy, it's like a tapeworm, okay? Until it hits you. All right? That's where it's at. That's so. When you ask what the market's going to do, now you can tell your friends. All right. See you on the charts.